So what is the interest rate at which you lend money to your borrowers?
So varies again, Kanan, and varies for different P2P platforms also. But in our case, a lot of the loans are no cost EMI loans, where the customer is actually not bearing any interest at all. The interest is borne by the dealer partner or the vendor in the format of subvention. The construct is very similar to what happens with Bajaj Finance, right? When you walk into a store and take a OnePlus phone worth 50,000 rupees on no cost EMI, you're paying 10 EMIs of 5,000 rupees each. So you're paying exactly the same amount that you would have paid had you bought the phone outright by paying cash or by swiping your debit or credit card. It is OnePlus as well as Chroma, if he is the vendor, who bear the subvention or the interest to be able to, for Bajaj Finance to be able to generate a return.
Okay, got it. So who pays you money? The platform,
the dealers,
the merchant. Who all are your merchants?
So we've got a lot of merchants in the upskilling education space, namely Upgrad, Simply Learn, NMIMS, and players, similar other players. And we've got quite a few merchants in the healthcare space. So there we operate in stem cell preservation, we operate in the IVF segment, we operate in skincare, cosmetic care, hair transplant, all discretionary use cases within the healthcare space.
Got it. So what percentage of your loans are dispersed through these all companies that you mentioned?
So almost like 3/4 of our loans are through platforms or vendors such as these.
Okay, and rest 25% are direct?
Rest 25% are direct, as well as we have a lot of fintech partners through whom which we do disbursements. So these are partners who will source a particular set of borrowers where they have either a special access or a specialized ability to collect the money. So we work with these partners. These partners, in the recent past, RBI has come out with digital lending guidelines where they are nomenclatured as LSPs or loan service providers. So again, there we have 40-50 such partnerships where these fintech players source customers, and we are the lender at the back end who actually evaluates the loan, underwrites the risk, and disburses the loan.
Can you name a few partners?
So players like Moneyview, Unicards, Cred would be some of the partners in this space.
Got it. So how does, so ultimately what is the effective interest rate that you get in your bank account from all these platforms for the money lent?
Again, it'll depend on individual platforms, it'll depend on the nature of borrowers, their risk framework and so on. But most of these will be in the mid to high teens.
Okay, say any number that you can give so that we can...
So 14% and higher would be the starting return for most of these platforms.
Okay, but why wouldn't these platforms go with a Bajaj Finance or other NBFCs which have, you know, very big lending book and are the top of the NBFCs?
Sure. So the advantage that, not that these partners exclusively work with us, they will work with 3 or 4 different either fintech NBFCs or other traditional NBFCs. The advantage that we as a platform are able to provide is a tech-first software system that very quickly and deeply embeds into their technology stack, which most large banks or most large NBFCs will either not be able to build out at a customized partner level, or will take a long time if they even go down that route. So the agility of our tech systems integrating and the flexibility in terms of customer service is where we have a USP over larger banks.
Got it. So how does the unit economic works? Let's say what is the amount, the effective interest rate that you charge, less the interest rate that you give to your lenders on your platform, and less the distribution cost. So how does that work out?
Sure. So broadly, I would say the end customer borrowing rate, either paid by the merchant or through by the customer themselves, typically ends up around the 20% plus mark. This is a business which is slightly high OPEX, not in absolute terms, but on relative terms, because to remind you, the ticket size are very small, right? Our average ticket size is about 40-50,000 rupees. The cost of operationalizing this loan, although we've tried to bring it down significantly through technology, but when you're working with CIBIL, when you're working through external vendors, there's a bare minimum cost that you have to expend out on originating as well as collecting on the loan.
Right.
That makes it a high OPEX segment where the OPEX could range anywhere between 7 to 8%. Reducing for the NPA, which in our case is the lowest across the P2P lending industry and probably compares very favorably with large banks and NBFCs also, is around or below the 1%
net
mark.
NPA or the gross NPA?
Gross NPA.
Wow. Okay.
And then post distribution commission, investors are able to earn anywhere between 9 to 11% on the platform.
Got it. So first of all, you are saying 20% is the effective interest rate that you're able to charge on an average on the amounts lent, minus 11% of what you give out to the lenders on your platform, minus 7% of OPEX, and what about the distribution cost?
That's about a percent.
That's about a percent. So 7, 11 and 1. So your net margin is 1% in
Is
this
1
case.
to, so eventually most NBFCs or banks, if you look at their NIM or net interest margin, is in the 2 to 4% range, depending on which segment they're operating into, depending on the risk of that segment. We also aspire to be in a similar range, although our income is not booked as net interest margin, it is booked as fees. But we'll hope to be in the 1 to 2% range at the bare minimum.